365, shake my hand. Welcome to another video on this channel. Today I want to talk you guys through the crypto nightmare, right? The light at the end of the tunnel, how to protect yourself, all the exchanges that might be part of the contagion situation, right? So exactly how I think this virus might actually spread. I don't want to promote fear or panic, but I do want to keep doing what I've been doing on this channel, which is to offer you I think good researched information to help you make smart decisions, protect your portfolios, defend your gains, right? If you have any from the last 2 years or so. Some of you started buying crypto as early as 2020, which is technically late, or 2019, right? So not everyone's portfolio is blood red. Like it's been dollar cost averaging in 2021. And then absolutely, just like me, those particular investments are in the red right now. So in this video, I'm going to walk you through a couple of things. I want to make sure my video is slightly different from all the information out there. I've done, if you check right there on the screen, guys, I've walked you through the FTX saga. I think I dropped a video, quite recently around FTX. I just don't know which one it is. But there was a video somewhere. I think maybe I went live on the channel. Please don't forget to subscribe because, I do make these regular updates when I can, right? So I did a video here, Crypto War Alert, Binance was FTX. That was 6 days ago. And in there, I kind of like mapped out exactly what's going on, right? So what I want to do in today's video is actually talk to you guys about crypto from the perspective of the legislator, number one. Number two, I want to go a little bit deeper into this problem. Sam Bank, the CEO of FTX was this really, really big hero in the markets, in the industry. And so it's actually very interesting to unpack it because that's what regulators are doing, right? They're not just going to FTX for the fun of it, right? There's a big example to make. There's a big push for anti-crypto legislators to go, look, you see, we told you this thing is risky. Granted, right? This is nothing new in the world of exchanges, and I'm going to explain that. I'm also going to then break down where I think your money should be, right? Not financial advice, but very sound, market information, right? Something that I'm doing for myself, for my family, for my kids, but also for our corporate clients on the trading floor, right? I might as well just take this opportunity to also just apologize that there wasn't a war room this Sunday, Monday. On Friday was my anniversary with my beautiful girl, and she surprised me, so we went away. Saturday, Sunday, Monday, came back actually sometime last night. So there was actually no time or chance for me to kind of like sit down and do markets. I'm actually, a little bit, also out of the loop. But I think what I want to discuss with you guys, if you've been following the channel, this is not a surprise to us. All right. We never know the micro details that will cause price to lose its intrinsic value. That's a fancy way of saying I never know the reasons ahead of time, not always anyways, of what's going to make the markets crash or sell or buy or boom. What I do know is when I look at price, I study the relationship between supply and demand, and I get market macro, long-term, mid-term, and short-term direction, and we are generally, most of the time extremely accurate. And we've spoken about this for weeks on the channel, for weeks in the war rooms, throughout the whole of 2022. In fact, in a month, in every day, 4 war rooms per month that we do for free on the channel, about 2 or 3 of those war rooms, Bitcoin was in them. And I've been telling you guys that this zone is going to break, that we're going to go down to 12K, 10K, 8K. And that's really what I did in my last video as well. In the crypto markets, when I looked at the Binance thing, then I did another video 3 weeks ago before the FTX saga. How far is the Bitcoin bottom? When will the bear market end? Today, I'm going to show you guys a different way of looking at this bottom, a different way of measuring it outside of supply and demand, just to bring in confluence. But please watch till the end because it's something very important. If your money is still in exchanges, you have to secure it in a very, very specific way. And that's about it, right? I was flooded with a lot of questions when I was away over the weekend. Is my exchange safe? Is Luno safe? Is Binance safe? Is Val safe? Altcoins, Coinbase, KuCoin, Binex, Bitstamp, CoinCheck, Crypto.com, right? Look, I don't have my hands in all these pockets, right? But I will be addressing exchanges today in this particular video because they all operate the same. Exchanges, crypto exchanges rather, stole, borrowed, copy and pasted a blueprint framework for our banking system. And so what we normally like to do is something called triangulation in research, where we use qualitative and quantitative research tools to actually mirror the two. And you will realize that most of our crypto exchanges, like the fall of FTX, mirrors the fraudulent banking system that we have legalized and that we have today. That's just my honest opinion on that matter, right? So let's get cracking, right, about what it is that I want us to talk about today. Right, so this is basically a quick summary of everything that's happened, since the last time I dropped a video about 6-7 days ago on FTX, crypto, Binance's exchanges, the scam, how deep it goes, the hack, there's a whole lot of things, the tweets by, the Binance CEO, and where all this leaves crypto, right? So I'm just going to quickly walk you through. I thought let me just quickly do a cute summary for you guys, because, there's a lot of articles and people speculating, and the details and the truth, could get lost in between. But this is basically it, right? Right. So basically, we know the basics about FTX and Binance, right? But the whole thing gets a little bit deeper from, the last time we spoke. And regulators picked up on several, key issues. Number one, first of all, Binance offers, right, made a non-binding offer to buy FTX, right? So non-binding means they could change their minds at any point, which they did 24 hours later, right? So Sam said that Alameda, his research company or the sister company of FTX, would buy every FTT token. So if Binance doesn't come to the party, it's fine. But the next day, CoinDesk released an article about Alameda's research company's balance sheet. Basically, can they afford to buy their own token? And Alameda Research, number one, FTX Exchange, and Sam Bank are technically all the same thing. So Sam created these companies, right? Well, Sam is the CEO of FTX Exchange, but he's also the owner of Alameda Research. So Sam Bank's FTX Exchange and Alameda are all one thing. So it's all done by the same person, all right? That's interesting because fundamentally, the article revealed that the Alameda Research had 14.6 billion inside their balance sheet, but it was held, in the FTT token. All right, it's kind of dumb. Now, that basically means, that money was magically printed out. In total, 8 billion of the 14.6 is in FTT, but the actual market cap of FTT was 2 billion, right? So that's actually a big gap. So even if FTX wanted to liquidate all their assets, remember, people want to withdraw their money. People are panicking. What the hell? This guy lied. This guy stole. Over the weekend, there was a hack. He's the hacker, by the way. It's just all crazy, right? So when people want to withdraw, I told you there's going to be a liquidity crisis, right? We spoke about this about 6 days ago. Now, when you want to give people their money, you have to sell all these assets that you have. But they actually can't make the what is owed because they've limited assets versus what they claim they have, right? So it wouldn't come close to the value of what they claim to have. And then this basically is like Money Heist season 11, right? The digital money glitch. And if anyone wants copyrights of that title, let me know. Now, let me kind of like make this, as simple as possible, right? So say I'm Sam Banks, Leroy, all right? So say I create a 365 exchange, okay? And because of that exchange, we create a 365 token, which is something I think Kanye West needs to do. He needs to do a Yay coin. I don't know whether it will be a success or not, but he needs to do a Yay coin, right? But anyways, I create the 365 token, all right? Same page, kind of. So I just want to break it down in a much more simpler approach, what he did. Now, basically, it's not real when I create it. It's artificial money, and I inflate its value based on my status. Let's say I'm popular on social media and other things, by giving it utility value. But I also buy a majority of its supply and then bend the rest to start increasing the value of the 365 token. I then send these tokens to my other company, 365 Trading Flow, which is Alameda in this example. And I show that in the 365 Trading Flow or in Alameda, I show in my balance sheet that I've got all this money based in 365 tokens, right? So I've created fictitious value, I've made a token, I've inflated its value, I've spun it around, and now I'm putting it inside the balance sheet of a second company, my research company. Then I leverage that balance sheet. Traders and leverage, investors and leverages, institutions and leverages will be the death of us all if you're not disciplined. So I take that inflated balance sheet now to the banks and to investors and to other crypto people. And I say, look, man, I'm going to leverage against my balance sheet. I've got 14.6 billion US dollars. What could go wrong? Borrow me some money against it, right? Then I borrow other assets. Remember, I am now borrowing other people's Bitcoin, other people's Ethereum, other people's actual real coins against my 365 token. I've created a 365 token, and I'm saying 10 Bitcoins is worth 2 of my 365 tokens, or whatever the math is, right? And then I send it back. So now I've received actual real tokens, real value, based off something that I created, inflated, manipulated, and it looks like I'm doing well, okay? We're on the same page there. So then I send it back to the 365 exchange. In this example, I send it back to FTX exchange, all right? So I got real money now. Now, creating a money glitch. What I've done there is I've created a cycle where I can print and print nonstop. Create an FTX token, use the status, give it utility, go borrow against it, get real money, and then, send it back to the exchange. I've created this loop for myself where I can print as much as I want and gain as much as I want, which is genius if you're an evil genius, right? Now, this works until it doesn't, because when something goes wrong and people want to withdraw all at the same time due to panic, it's time to pay up. But how am I going to pay? Remember, the exchange is forced to convert their stable coins, their tokens, like my FTT or my 365 tokens, into actual money. But where will the money come from? The exchange needs to liquidate its assets, liquidate tokens that are actually worth nothing, because I just created those tokens and I inflated it. But in real life, they're absolutely worth nothing. Man, that was basically like the crust or the genius, like the El Professor of this money heist was Sam Banks, right? And so that's how we kind of, there are many things that I left out which are not that important, or someone has already covered on the internet that I don't want to keep repeating. He stole from himself he covered it from his own, top managers. They wouldn't know. I mean, 10 billion was moved around, etc., etc. But that's the crust, right? Created a fake token or an own token, gave it inflated value, really moved, and that status of being the king of crypto, bailing out, all these different exchanges, all these different crypto projects, gave him that validity, that legitimacy, all right, across the floor. But in reality, is when the bubble pops, right? People starting to realize, damn, they actually were leveraging clients' money, right? Misusing clients' money that will always get regulators on the phone, right? Literally on your ass on the double, all right? So that's kind of like, the short summary of what happened there with the FTX saga. Now, please tell me, if you're in the public Telegram group, please remember that earlier on this year in June, I said, please go watch The Big Shot. The Big Shot is this movie. It's entertainment, but it's based on real life events of actually how exactly the 2008 crisis happened. Most crises in capitalism for the last 400 years are based on institutional flaws, right? Flaws, mistakes, corruption, systematic degradation of the system itself. The 2008 crisis was a banking crisis on housing, software mortgages. And on the 365 public Telegram group, I was like, yo, go watch this movie, understand it play by play, take your time, write notes, because I believe the exact same thing is going to happen in the crypto markets. Now, a lot of people at that time, were thinking, is there really a correlation, right? So Kevin already the other day came out and said, this is generally the formation of a bottom, right? When a big player gets taken out. Guys, this is so important because FTX was the second largest exchange. This is not an exchange somewhere in South Africa in a small village, with 200 clients. This was the largest exchange with his hands everywhere, literally in different crypto lending programs, in different projects, in different actual coins. Look at Solana. It's like absolutely insane how long the legs of this whole thing grow. I mean, I'm tired of researching it as we speak. I'm pretty sure by the end of the week, more news would have come out. In fact, By the end of this week, I'm pretty sure another exchange might be in danger. And that's the whole crust of this video if you watch it to the end. Right, so, after that, I guess when I was away over the weekend, Friday, Saturday, Sunday, the CEO of Binance, who took out, and please, people, that was a calculated move by Binance, right? There's nothing about Binance that was, coincidental. The goal there was to take out his competitor, number one, but it helps that his competitor was corrupt, greedy, and a big liar. Sam Banks, if there is justice in this world that money can't buy, if that justice exists, Sam Banks is going straight to prison. All right. If things go the way they go in our everyday lives with corruption, loopholes, yeah, he's filed Chapter 11. Chapter 11 is a bankruptcy title file, right? But generally speaking, there are so many capital crimes that were committed here. He needs to go to jail. All right. But if we think about it, what Binance did put Binance in a very unique position. Immediately after that, the CEO of Binance, and if I find the tweets, I'll put them up. If I don't, just take the summary from me. Literally, basically said, look, man, exchanges need to be more transparent with their reserves, right? And I want us to get into that. But the summary of the tweets this weekend were, number one, Binance tweets about the whole pulling out of FTX long term, maybe buying, not buying. Sam Banks denies everything. The market crashes. Binance then offers to buy FTX, and then decides not to buy FTX, crashing the market a little bit more. The Tron founder comes on and says they're working on a solution. Absolute crap. FTX US, and Alameda Research Companies, right? Sam Banks basically files a class covering Chapter 11 bankruptcy claim to say we don't have enough money to do what we need to do, which is to give people their money back, give them access. We need about a $10 billion bailout, essentially, which starts a different type of process. It could take up to about 120 days for investigators to figure out if it's worth it or not, and all that kind of stuff. We shall see. Literally out of nowhere, Sam Banks tries to hack FTX, right? Literally drains assets from FTX already, and he's rumored to have now fled to Argentina or some weird country. It's absolutely crazy. But if we look at the charts, and we go back to let's go back to January, February. This is where we were in the month of January, and this is the video I did for you guys. I want this. The reason why this is so important, right? The reason why this part of my video is the most important part is I want you to know that everything that I've just said, everything that has happened doesn't matter. If you follow supply and demand, it does not matter. When Bitcoin hit an all-time high in 2021, we started to discuss the possibilities of price coming back down to collect unfilled orders before markets go to 100,000, 200,000, 300,000. The only people who can push price that high are the people who benefit from getting assets low. If I want to sell you a pen, right, and I want to make money out of this pen, I am going to find the manufacturer of this blue pen. The manufacturer will sell the pen to me at $1. When I come to you, I'm going to sell the pen at $3. It is basic profit maximization markup 101. It is the craft of entrepreneurship. It is what people are doing in drop shipping, drop servicing. You put a markup on a service for being a middle person. Now, take that common knowledge to the markets. For example, if you like bread and you go to your local grocery store to buy bread, I've done this before, literally on charts. Whoever the grocery person bought the bread from, the actual person who made the bread at a wholesale factory, bought the bread for 50 cents, is selling it to you at retail price for $3, right? And that's just how it is. Same with all these assets, forex, supply and demand, crypto, supply and demand, stock market, blah, blah, blah. If you want Bitcoin to go to the moon, we have to bring it back at a wholesale price to get big players to buy in bulk. You and I buy as well as quickly as possible in a secure way, which we'll talk to by the end of this video, okay? And then price moves. And so the charts were so clear. The charts were so clear. And remember, at the beginning, who could remember all the crazy stuff that happened January, February, March this year? Does anyone even remember we were in a war, right? Not we were in the war, but there was a war, Russia and Ukraine. Remember the crazy spikes of inflation, when inflation at 4 to 5% was a big deal. When the Fed started to taper, right? Markets were absolutely crazy. Markets opened lower than they've ever opened in a year. I'm talking about NASDAQ, S&P 500. There's always a crisis in the world. There's always a crypto meltdown somewhere. There's always a failed project. There is sometimes a Donald Trump. Then we got the old guy, Biden. We got the, the token holder, Kamala Harris. What has she done for anyone? Like, there's something in the media to titillate your attention in a short span, but my message to you today is, does it matter? I'm talking to people who've done my course. Like, the link is down below. If you look at supply and demand, does any of this matter? We've been selling nonstop. Does it matter that FTX has collapsed, right? Maybe if you lost money in FTX, sure. But generally speaking, for crypto, does it matter? It doesn't, because we use supply and demand as a guiding stencil to mark up where price is going. If you cannot tell me where price is going, please stop trading. You're wasting money. You're wasting your time. You have to be able to read this. When I did Bitcoin is going to create a lot of boom, emotional damage. Remember that video I did, earlier on at the beginning of the year? The emotional damage video was talking about this. This was coming. I did that in February. Right. Now, 6 days ago, on this particular video, 3 weeks ago, and actually 6 days ago, I told you guys that we need this green area to be removed. We need price to remove this green area. And the FTX saga has created enough sell pressure, and you can see for yourselves here that, wrong thing. You can see for yourselves here that on the monthly time frame, it's been removed, clearing the weekly demand that's been holding price up for a very long time. I'm talking since 13th of June of this year. Markets have basically been bouncing around this area. The entry to get into these cells was given to you 3, 4, 5, 6 weeks in advance. When we mapped out the supply there's a whole video on the channel around that, where I told you guys that there are a lot of people who are going to say Bitcoin is going to pump to the moon, it's going to break out of this trend line, blah, blah, blah. There is a supply above. It is a block. It is a non-go area. Sellers are in control. If you notice the last time price arrived, I'm bringing this up, not so much as to waste time for you, but to really show you that if you understand your strategy, right, and your strategy is perfect, you can spend the rest of your life perfecting your psychology. But what helps psychology is a clear strategy, clear rules that you don't have to manipulate, you don't have to change. Because if you don't have to change your rules, all you now have to do is to work on your nerve. Are you greedy? Are you fearful? Do you have FOMO? Do you suffer from confirmation bias? Do you enter early? We can work out the trading psychology nodes, but it's difficult to navigate trading psychology when your plan isn't clear. When you don't even know, are you a buyer? Are you a seller today? Is it because CPI is positive for the first month in how many months? Now, all of a sudden, your strategy is changing. It is very difficult to map out these basic things if your strategy is not in line. Now, this is where the whole saga starts. You see, Saturday, markets arrive at a supply. The very next day, Binance on Sunday the 6th actually makes the announcement. Announcement number 1. We are going to pull out of FTX, and then everything else rolls out, right? So it's just been beautiful to watch price play out like this, right? I'm currently a big casualty of the dollar turning, changing course, right? As a lot of people, start to attack the dollar and really focus on, and that's fundamentally off the back of a positive CPI reading, right? A lot of people are very pro risk on assets because CPI gave us a reading to tell us that actually inflation was going down, and I will cover it in the next war room, but be very careful about that, right? Remember, Powell is not going to be that excited. I haven't even looked at the stock market in a couple of days since Friday. I'm making this recording. Today is Tuesday, I'm not mistaken. I'm deep inside holiday mode, man. I can feel like I'm tired, I'm shut down. It's been a long year. We were supposed to close the trading floor today, but due to this whole crypto stuff and crypto meltdown, our trading floor will be open until the end of November. And I just want to explain why and why you should do what we are doing, right? So anyways, we'll look at NASDAQ, a little bit later on. Right. So where to now? Right. So the big issue is obviously something called contagion, right? How, one very big, the second largest crypto exchange can fail, and how it can affect everything else in crypto. And that's a real thing to be worried about. I don't want to promote fear, but I'm telling you that this is a very big deal. It's a big deal. You need to be very worried about it. And this is where all these other exchanges, right, literally, come into play, right? There's a little bit of Polygon, a little bit of Solana, all these small crypto projects, Voyager, all these big things are all going to be affected. But even exchanges that have nothing to do with the Sam Banks saga are going to suffer from basically loss of confidence. We're going to lose years and years and years of value, convincing people that crypto is real, convincing people that it's secure, right? A lot of people with that short-term, mentality who don't really understand, long-term utility value of crypto markets, are going to lose them. So that creates capitulation. You'll see capitulation like this on your charts, right? It's always there. It's always in front of you. Capitulation looks like this, right? All of a sudden, you get these days where price starts to try and sell, and then immediately when someone makes above what they thought they needed, trying to break even, they dump. You're going to start to see fear. You're going to see these big red emotional candles, right? All of that is basically contagion, but it's going to cost us years worth of value, right? And this is also, for me, it's like I have to put it out there because it's true. But for me, this is what I wanted to see in Bitcoin since the beginning of the year. I want a 12,000 US dollar Bitcoin. I do. Everything that I'm dollar cost averaging, all of 2021, is in red right now. That's fine. But we bought, if you follow this challenge in 2020, I say do it all. Sell your kidney, get a loan, da-da-da. Buy Bitcoin at 3,000, 4,000. Bitcoin was at 4,000 US dollars at COVID levels. That's still green right now, right? You guys are aware of that. All of that money is still very green. Some people took it out, bought this, bought that at the tops, whatever, And so we want price to come back down. It is unfortunate that it's coming down, under these type of circumstances, but it's actually, it's basically, what do you know, right? So how do you plan for this? Now, the whole crypto thing, maybe if I can quickly, as I move on to the last 10 minutes of this video, the whole crypto thing is, like I said at the introduction, is fundamentally a big mirror of our banking system. And I want you guys to understand this. I'm pretty sure, without doing a lot of Googling around and research, I'm pretty sure this is universal. So if you're in America, Egypt, Japan, China, South Africa, Zimbabwe, Botswana, Namibia, wherever you are as a 365 student and whoever is watching, it doesn't matter which country you're from, the banking system is the same in general in terms of how they operate. And they have this annoying thing that has never made sense because no one else in the world can do it, because doing it does not make sense. They've this annoying thing called fractional reserve banking system. That's what it's called, fractional reserve banking system. Right, fractional reserve banking system, and I think it's actually quite an important thing to remind ourselves. This whole thing with FTX and Alameda Research and the whole thing has got nothing to do with the intrinsic value of crypto, nothing to do with the utility use value of crypto. What it does, though, is it points out the systematic framework in which crypto exchanges have been built on. Therefore, if someone was to say what happened in FTX was a Ponzi scheme, I would absolutely agree. But if someone says crypto is a Ponzi scheme, that would be crazy, because the Ponzi scheme, which is the framework in which FTX is built on, which is the framework that most exchanges are built on, is the banking system framework. So if we are agreeing that what FTX did was fundamentally building this stuff on a Ponzi scheme, we must agree that the banking system in general is a big Ponzi scheme, which it is. Now, fractional reserve banking just points out or speaks to just a simple thing. Basically, a bank is allowed to take up to 97, and I think in South Africa it's 90, but you get different varies, 95 and 6, 97% in America though. 97%. The bank is allowed to take 97% of the money in your account and borrow it out So they make money off your money, because remember, the only way that banks make money is to sell something, and to sell that thing, they put interest on top. So if I want to give you money as a bank, I can't just give you money, right? So we're going to give you money for a car loan. We're going to give you money for a business loan. We're going to give you money for a home loan. There's going to be this thing that we exchange, and I'm going to slap a lot of interest on it. Bearing in mind that as the bank, all I have to do to get this money is just print it, or simply use the fractional reserve banking system. So if, let's say, you're $1,000 in your bank account, the bank is allowed to lend up to 97% of that money to someone else. How cool or crazy or corrupt or non-consensual or dangerous is that? That's the banking system, right? When they lend it to someone else, they charge some interest on it, like serious interest. When you now want to withdraw your money and you want your 1,000 Rand back, they will most likely get it from somewhere else, so that you always have access to your funds. While the money that they loaned out, which is almost $900 of your 1,000, is making their money on the other end, right? Eventually, they can loan out the 900 and loan it out and loan it out and loan it out, to a point where, if you do the maths, which we don't have time for in this video, out of your $1,000 deposit in your bank account, the bank can make anywhere up to 10,000, cleaning and rinsing and loaning out that money, right? It's a fractional system where the bank can borrow and leverage, lend out to different people, right, a small portion of money and make more money. Now, the banks can do this because they have the guarantee of the government, the Reserve Bank, the governor, Powell in America, whoever in your different countries, right? The government is the backing point, right? No matter what happens, the government will make sure you get your money back. If there's a crisis, we will print the money, all right? It's a backing, there's a guarantee. So that's why a lot of people don't really focus on this Ponzi scheme. That's the banking system. A good place to start is, what happened to people's money in 2008? In Zimbabwe in 2008, all the banks closed. No one could withdraw their money. In many countries in 2008, the value of people's money disappeared. They hid behind the doors of hyperinflation, right? But the honest truth is, the banks did not honor that guarantee. Now, it doesn't happen that often, okay? But because of the government backing, it's generally not frowned upon, and people don't understand it, or no one really cares, because after all, how can my own bank rob me? They do it all the time. Now, here's the problem. This framework can't work in crypto, because in crypto, if you get to a place, right, where you don't have a situation where you can actually guarantee people's money, if I give you $1, you need to have reserves somewhere else where my $1 is reflective and there. That way, if you end up having $100 billion of people's money, you need to have equal reserves. Equal is utopia. Equal is dreamland, but it is the preferred dreamland. It would be better if they could do 1:1, right? If I deposit $1 million, on the other hand, you need to have my 1 million sitting somewhere else. And this is really the problem with exchanges. Most exchanges can't do this. The banks don't even do it, but the banks have a government guarantee, right? Exchanges don't have a government guarantee. Crypto is barely regulated, okay, right? So this is not something the government wants to guarantee, okay? So when a crisis happens in an exchange or in the markets, and your exchange can't even guarantee you 1:1 of your monetary value, it becomes a problem. Number one. Number two, the bigger thing here, and we'll get to the solutions for your own portfolio, by the way. The bigger thing is, most exchanges, check your Luno. I don't want to name names, but check all the exchanges you're in the terms and conditions. Because I had a team, look that up for me while I was away. Most exchanges are very upfront and honest. Most exchanges, in their terms and conditions when you join, say, hi, just so you know, we make money by loaning out your money for interest and staking and API. That is the business model. This is the business model. The business model is, you come to our exchange, you buy Bitcoin, you give us fiat, cash, we put it somewhere, we give you the approximated value of a token, right? But technically speaking, if we need to, we can also loan out that token. So we take your cash, we give you a token that we take back and loan out, right? You are looking at your portfolio, you're seeing all these nice numbers, you're now a millionaire. It's just numbers, baby, until we can, you know, really meet the requirement of cashing it out. And this has just been how most exchanges are built. If you now look at the FTX model, the Ponzi scheme model, the banking Ponzi scheme model, the fractional reserve banking system model, which is literally all the same, it becomes an interesting problem, because if nothing is backing up the money, then everything can be easily lost. And that's what happened, right? Now, I told you guys, you know, the last time I did, you know, the video before I disappeared for the weekend, I had 3 withdrawal requests. 2 were honored, 1 wasn't towards the end. The 2 were the larger ones, right? So I've been using FTX to trade, to spot trade, not to really keep money. I mean, no, I hardly ever keep a lot of money on the exchange. I actually rotate capital on the exchanges for trading, for spot trading. So I've been selling a lot of crypto, you know, throughout the whole year, as we should have all been, and I kept telling people to do that. So they honored 2 withdrawals and they didn't honor the 3rd one, which is, you know, neither here nor there. All right, it's just part of the shocking thing, right? So now on to the part that you've been waiting for, which is the conclusion of this video. What do you do with your portfolio? What should you be doing? And I don't know, I can't tell you what to do, so I'm going to tell you what I'm doing. I'm doing this for my corporate clients, which is why for the next 15 days the floor is still open. I'm home today, Tuesday, and I'm home tomorrow, Wednesday, and then Thursday, Friday, and the whole of next week until November, I'll be back in the office. So it's going to be, this is literally, I'm giving you my blueprint game plan. It is not financial advice. I don't want to trigger panic. I don't want to trigger fear. Yes, we're a small channel, but you know, for all of you, watch my videos and subscribe, listen, make money with me when I make money, lose with me when I lose. I appreciate you, and I really wanted to get this video out as soon as possible. I don't think this is the end of the stuff. I'm doing this. Remember, we want crypto to go down. Your long term, we don't really care about the drama. All right, Bitcoin isn't going anyway. This is literally the future. It's basic. XRP has outperformed almost every single crypto token for the last 2 weeks during this crazy time. Told you about XRP. Even when your influencers were telling you to dump it, it's a useless, it will never recover. It literally is starting to show. It's starting to show why. I'm not recommending XRP to you. I'm simply saying, look at the stats. All right. But I don't think the drama is over. I'm pretty sure the deeper the nails go into FTX, the deeper the discovery is, the contagion will spread, right? We saw about 48 hours ago, the CEO of crypto.com said, hey, we moved all the Ethereum and we sent it to the wrong address. What do you mean? Right? And this is it. This is it. This is what you should be doing with your portfolio. You have to think about it this way. We know that the Fed is going to remain hawkish. I know CPI went down, blah, blah, blah. you decide for yourself what you think you're going to do there, right? But we've got a hawkish Fed right now, and I will change that when Powell comes on stage on the 13th of December and says, I've changed my mind. Right? Okay, cool. It doesn't mean I will just blindly sell stuff now. I'm happy to buy on the intraday, right? I haven't traded since CPI data, to be honest, right? So this week, I'm in and out of meetings, wrapping up the trading flow. So from next week, sure, I'll be trading with you guys. If it's still buying time, I'll buy short-term trades. But for swings, I'm waiting to see where this rally will end. Personally, that's me. But this is the macro environment we're in. We still have a hawkish Fed because policy hasn't changed. As far as I know, I've not seen a single policy change. I've not seen a monetary policy shifting. I have not seen Powell coming to say, please expect a, reductive rate on December. So hawkish macro, number one. Number two, we are not yet at a governing demand for crypto. That's important for me. I'm not buying. I don't think no bull market is going to come to an end if we have not yet arrived at a governing demand. And we know for Bitcoin, the governing demand, and I've told you guys many times before, is that range between about, let's call it 8K to about 12,000 US dollars, right? We need crypto there. We can't ignore there's unfilled orders. They're literally unfilled by orders. In a perfect world, I would rather have that demand broken than price not get to that demand. Does that make sense? Because if price doesn't get to that demand, I now have to live for the next 2 to 3 to 4 years anticipating if price is going to first go a little bit up, 50, 60, 70, 80,000 US dollars, just to come back to 8K, 12K. We are about 16,000 US dollars on Bitcoin right now. Let her fall. Let her drop. Let her complete the fall. Let's go into another bear market next year. I told you before, in my videos, drink water, force yourself to eat avocados, check the damn road when you cross so you don't get hit by a bus. And if you do that, you might just sleep for another 5 to 10 years. Well, that's all you need to become a crypto millionaire. Right now, if you're in a rush right now, today, on the 15th of November, so I don't waste your time. If you want to become a crypto millionaire right now, today, just simply become a billionaire, okay? And then we will pull you down to a millionaire. Until then, change your perspective. It's a 3-year plan, guys. It's not that long. It's November right now. So the macro, anyways, doesn't speak or relate to anything that looks like Bitcoin could be turning around today in the making of this video. Bitcoin, generally speaking, in a bear market, has to lose between 80 to 85% of its value. We are not yet there. We might be in the high 60s, early 70%, but we need to breach that routine. All right. So I am still waiting for these things. But for your portfolio, this is what you need to know. With FTX on fire, other projects, right, on fire, right, and then contagion, right, contagion spreading, creating more fire. How on earth does crypto.com, right, literally send over 25 million US dollars worth of Ethereum to the wrong address, right? And it's not the first time they've done it before. They did it a few years back, if I remember the story correctly, to some other woman's account, right? They sent about 10 million bucks by mistake. She bought a house. She was like, I'm not sending it back. You sent it to my account. Thank you very much. They had to take that poor lady to court. She then go sell the house, sell everything just to give them back that money. But such rookie mistakes in exchanges, they keep showing it. The first 2017, 2019 crash. You guys don't post that, right? Look up MGT, right? The MGT crisis. Those guys are trying to bring those recovered coins back into the market. That's what I thought was going to crush the markets in August, by the way. I was going to do a whole video on this, and then they released a letter saying, look, man, we're going to delay, then delayed by 1 month, and then the saga just disappeared. So we don't even know when that impact into the crypto market is going to come back. But basically, many years ago, someone stole a lot of money, a lot of coins, a lot of Bitcoin. It was MGT or MGT, something like that. I mean, I'll put some pictures all over here to just remind you in articles, right? Now, what happens is people bought Bitcoin at that time for 200, 400, 300 US dollars, right? So if the case is done and they've recovered most of those coins, and those coins now need to go back to their users, think about it. You bought it for 400 US dollars. Yes, it was stolen from you, but it's coming back today. And today, the price of Bitcoin is worth 16,000 US dollars. Yeah, we're in a bear market, guys, but people can still make money. Once again, you bought the token for 400, 200, 300. If it comes back into circulation, one token is now worth 16,000, maybe tomorrow 15 or whatever. What do you think you're going to do in this climax, in this context? You're going to sell. So if all those coins come back into circulation and all these users who are like, well, we haven't had our Bitcoin for over 5 years, 10 years, someone stole them from us, let's quickly sell and cash in now. These guys are getting a massive profit margin from 400 to 16,000. That's going to create more sell pressure. I'm not saying that's going to happen now. I'm just saying there's just so many weird things going on. Now, so for all of this to say, basically, this is going to influence the market makers. And that's what your portfolio needs to be looking out for. Market makers are notorious, and all they do is create tops. and bottoms, right? Remember, I gave you my famous quote from 1934 from a guy called Wyckoff, the stock market genius, just after the World War II. Wyckoff analysis is a beautiful thing. I'm going to teach you guys the stuff in module 3. Right? But Wyckoff said, think of the market as the composite man, as one person. Later on now, we call that smart money. Basically, market makers. Market makers create tops and bottoms. If the sentiment, which I believe right now, the sentiment is quite foul. If market makers believe the sentiment is quite foul, all they do is open a hole. Right? It's that simple, right? And decide this is not the bottom. And now we know we're waiting. The best way to pick up tops and bottoms is through supply and demand. We're waiting for that governing demand to catch price, right? So for your portfolio right now, I would not be buying anything that you are not sure about of its utility and value in the next 3 to 4 years in a bull market run. If you're not in my Wealthy in 3 Years program, then you have no idea, because there are specific assets that I've sent out. I think the last one was in April, and I just stopped because this had to happen. I needed price to drop. So those key assets, I'm just dollar cost averaging into. All right, but we have to wait for market makers to decide this is really the bottom. We don't decide the bottom. We can analyze and speculate where the bottom is through supply and demand. Right now, what I want to then do is quickly show you, the last thing about Bitcoin. I did say I'm going to show you a different way to analyze this thing, right? And there have been several, right? So there's this famous chart of mine that I look at every Sunday with you during the war rooms, right? This one that has been very clean and clear. We've been spot selling Bitcoin as a traders, not selling our investments, but selling on the spot market, right? Trading Bitcoin to the downside. We've broken a demand, right? This demand does not exist. There's nothing even to draw here anymore. And I must say this, by the way. This is very possible, right? You could get, good news, we figured it out, and Sam Banks is going to jail, right? You could get a pump up, but just know it will drop again. Price will not breach this area, right? This is the weekly supply, which is a good place to sell, right? That's not what I'm doing here. That's not what I'm doing here right now. Okay, that is not what I'm doing here right now. I'm simply saying it could happen, right? So focus. Now, there's another Bitcoin chart that I shared with you guys on I think maybe it was on Coinbase. I don't know. Because I've just been trying. All right, so this was me breaking down the pattern. If you guys remember this thing, most of the stuff wasn't there. You see this rectangle? It was not there. The candlesticks were not there. So I said we're going to expect a drop like this. I promise you, I did this in a war room. Please watch my videos. I said, given this pattern, these flags and breaks, I used the ghost feed to calculate exactly how far the next drop is going to be. And you can see for yourself that this rectangle has basically almost been reached. Look at this. This is crazy. This is bizarre. And then I told you guys that we can start to find some buying pressure all the way down there. And look how close we've come since the last time we looked at this chart. Fine. Right. There's another chart that I'm pretty sure. I want to use a very clean chart. Yes, let's use this chart. I'm going to come here because this is much more emptier. And I'm going to talk to you guys for literally 5 minutes about Bitcoin 4-year cycle, right? Bitcoin 4-year cycle is a very notorious thing to kind of like use to gauge where the market is. The Bitcoin 4-year cycle speaks about predominantly how Bitcoin rotates every 4 years. And for some reason, no matter what happens, November, December is a very big time in the 4-year cycle. In fact, most November, December in every 4 years have generally led to a bottom. This is the 15th of November that I'm making this video. I'm 15 days from November ending and 45 days from December ending. I would like to make a hypothetical argument that if the Fed tells us that there's going to be a U-point, turn point, right? Or rather even a pivot point. You should know the difference by now. Right, in December the 13th, it could facilitate a bottoming process. Now, let's quickly look at Bitcoin together, because remember, I am just a light-skinned guy with a big scar on his head on the internet, Gotta back test everything I say. Back test creates confidence. Confluence grows your understanding, gives you the practical tools to do it by yourself, because every day, in every way, you need to get better and better as a trader. So as quickly as possible, I'm gonna put vertical lines every 4 years in November. That's all I'm gonna do. So this chart starts in July 2010. I'm going to look for the first November, which is somewhere here in 2010. That's October, boom, November. You see that there? That's the first November. Now we're going to look counting forwards. 2010, we need a November in 2014. Okay, there's no time. I could talk to you guys about Bitcoin halving that's happening in 2024. But yeah, there's November 2014, right? Remember, I'm just using November, but we're looking at November, December, that 2-month period. We'll see. We'll see what's cooking there. What's next? 2018, November 2018 from 2014, right? That's 4 years. Fair enough. In forex markets and stocks, we love to say banks thinking 3 months, take profit in 1 year in a 10-year plan. Bitcoin is always at a 4-year cycle. I'm teaching it to you right now. 2018, 19, 20, 21, 22. Oh, okay, so from 2018, we are now looking for November 2022, which is where we are here. Isn't that interesting? Look at this clean 4-year cycle. Now, all I want then to see is, I want to look at the number of times Bitcoin has had a downward. I'm on the monthly chart here. So I'm looking at long spells of a bear market, 1 year, 9 months, 6 months, doesn't matter, where Bitcoin kept falling. And I want to see where the bottom is in this 4-year cycle, right? So we're going to start from the beginning again, and we're going to see. So we have the start of Bitcoin here, where everybody thought, yeah, this is a bit crazy, and this thing was 10 cents, and you could all be micro billionaires if you bought $100 worth of Bitcoin in 2010, but it's not your fault, right? You didn't know, right? So there is a slight downturn here, but that's November 2011. It's not part of our 4-year cycle, but I'm just saying in November of 2011, November, markets bounced up. It wasn't even part of the 4-year cycle, right? And then we have this downward trend. So guys, I'm looking for these obvious drops in price, like that, right? So we've got another drop in price there, and we can see that price starts to bottom out. That's there. November 2014, December, we get another bottom, all right? So this is 2014. This is not me. This is not my video game. This is not my program. These are the charts. This is free data from TradeView. I'm not making this up. I'm just opening your eyes, all right? Please. Now let the eyes of your understanding be open as well. Now look at this. Price pumps after this November thing, right? This is where people got very critical of Bitcoin, right? This drop here in 2017. They're like, yeah, you see, Bitcoin is fake, right? And this is where price stopped dropping. This is November 2018, December 2018. You see that there? Once again, right? So every 4-year cycle, November, December seems to be a good time for price to bottom out. I wonder why. Right, this is an interesting period because I love this one. I love this one because most of my crypto money was made here. I told you guys everywhere. 365 Trading Academy Facebook page, my personal Facebook page. I didn't even have YouTube by then, a YouTube channel. This is where COVID was. Bitcoin in March of 2020, 2 years ago, was literally 3,800, 3,900, 4,000 US dollars, and rallied all the way to 65,000. Bitcoin in a bear market right now, for those of you with a good portfolio, you started buying when I told you to buy. In a bear market right now, the majority of your portfolio, which is your consistent buys when markets were still low, are still in profits. And it seems like we have now arrived at yet another November, December. I think that's interesting because there it is there. This is November in the 4-year cycle, and I keep telling you that there is something going on here about this demand that we need to respect. Right. Now, you will notice that these bottoms are not clinical. They're not surgical. They're not clean. It's not, oh, it's November, go up, right? You get a bottoming, right? You see this? November, yes. December, January, February, right? Consolidation, then price goes up, right? So don't all of a sudden think, oh, November, that's what he's saying. That's not what I'm saying at all. I'm saying this. This is what I'm saying. Join 365 Trading Academy, then supply and demand, the link's down below, or join the Wealth in 3 Years program for crypto takes. The next financial note will happen when I think it's now time to buy. And I think that time is coming soon, right? New projects anyways, right? Until then, right? You can see there is another bottom. It took 3 to 4 to 5 months. In my last war room to you guys, if anyone was paying attention, help me God, I said in Q2 of 2023, I'm going in. Selling my kidney, I'm going in hard. And all the data is colliding. So I still think there's a little bit of room to go down on crypto, but I'm letting you know that this is literally happening. Now, this is the most important part of the video for the 3 of you, 5 of you, 10 of you who are still here. Get your crypto out of exchanges. No exchanges are safe. I am saying these names out loud just so you understand what exchanges are. I am not saying that I have prior knowledge that these exchanges are going to fail you. I'm simply saying, when I say exchanges, I'm talking about Binance, Luno, Val, altcoins, Coinbase, KuCoin, Karen, FTX, Bitfinex, Bitstamp, CoinCheck, Crypto.com. Get your money out. This is not financial advice. Get your money out. I have a 90% win rate this year. Get your money out. Past performance is not indicative of any future outcome. Get your money out. I've been barely wrong this year. Get your money out. This is not rocket science. If you've been listening to anything that I said in this video today, I told you that exchanges make their money through loaning out your money. So when poop hits the fan, they might not be able to pay you. I don't know how far this contagion will spread out. Now, when I say get your money out, it is not the same as sell your crypto. Take money that you invested 3 years ago with an 80% drop, less in value, and get out. Why? You're never going to get those good prices that you bought at. That's not what I'm saying. I'm not saying we now give up on cryptocurrency. I'm simply saying exchanges, specifically exchanges, are prone to the following things. And I wrote them down for you here. Number one, hackers. Sam Banks hacked his own exchange in the middle of an investigation while trending. I was sabi now, bro. Like he didn't give a damn, right? Breaches. Exchanges are, all exchanges can be breached. Binance had a little bloop in their futures market sometime this year. Now they believe that it was FTX that was trying to hack Binance, right? Luckily enough, no Binance clients were liquidated because it was the futures, not the spot market, and there was whole drama around that, okay? Number three, withdrawal freezes. Imagine needing your money because things have gone bad, or because you're now panicking and it was grandma's money, or you took out a bank loan and you might as well just go out with 20% profit than lose it all. And then the exchange tells you, Asinamat, we don't have money right now, so please be patient. Exchanges can do that. Exchanges make mistakes. Hey, your Ethereum, unfortunately, is crypto.com. We sent all our Ethereum to the wrong address. Apologies. It's crazy. Mismanagement, fraud, the list goes on and on. Glitches, government control. This is the last thing I'm waiting for in the crypto markets. Government control. There is no parasite, no mosquito, no virus in the world as dangerous as a government in every single country. Governments are a plague to humanity, and this is what they want. On the conspiracy theory side of things, people think Sam Banks was always planted by the government to nuke crypto from the inside out. I don't care. I don't know what's true or not. I'm not here to promote that stuff. But government control is a real thing we all should be worried about. Government control will come in the form of regulation. They will tell the exchanges everybody needs to have a KIC document. It's already happening. This means they now know who you are, where you are, why you are, under the pretense that crypto generally can fund criminal activity. Guys, criminal activity has been around since the beginning of time. There have been wars, criminal wars. Bitcoin started in the early 2010 for crying out loud. All these wars have been financed through fiat, cash. They will make this stuff up just to get control. Once they have control and have regulated front of the exchanges, which remember was what Sam Banks was arguing for. It was in line with that governmental thought, right? That's why most of us old school crypto guys didn't like that line of thought. You don't want government in crypto, you want it far away. Because remember, we are trying to decentralize the financial system. Okay? Now, all exchanges, the ones I mentioned, the ones I did not mention, the ones I forgot about, are prone to these things. They cannot guarantee you anything. Anything that you hold that you're not trading. So I'm talking about long bags here. I'm talking about holding crypto in an exchange, waiting for the value to go up, right? Exchanges should be used for what they're designed for. Now that you know the fractional reserve banking system, please remember what exchanges were designed for. An exchange is designed to exchange. It's where you put fiat and you get crypto, cash for crypto, or you take out crypto and you get fiat, right? You exchange the values. Exchanges are great because they give you a doorway to spot trading. So I upload capital in an exchange so I can trade. I can risk $100, multiply that by some leverage, and then have the buying power of $1,000, and then I can trade against other traders, buy and sell cryptocurrency. When I get the profit, exchanges are also good for short-term withdrawals, or again, exchanging my dollars in profit into crypto that I want. Exchanges were never designed for long bags, which is what investors are doing, which is what you should be doing. You should be buying crypto. You should be buying crypto now more so than ever before. Not financial advice. I'm simply saying you need to be making sure you are taking advantage of this beautiful discounts. But keeping your crypto in an exchange is dangerous. All right. Why? Because at the end of the day, the only way you can get these things done to you, hacked, breached, withdrawal freezes, mistakes, mismanagement, glitches, and government control. The only way anyone can do that to you is because you do not own your crypto keys. That is the whole point of this video. Not your keys, not your crypto. If your crypto is in an exchange, the exchange owns the crypto keys. So you'd be like, yo, I need my 300 Bitcoin into my account right now. And the exchange will be like, yo, the whole world is on fire. Sorry, but we don't have that money right now. But don't worry. They love that. Sam Banks was like, don't worry, everything is okay. 24 hours later, he was like, damn, I need a bailout of 10 billion. They will say that. They will tell you to wait through the storm. They will tell you that they've got big clients. They will always service massive clients. They are donors, they are sponsors, they are banking partners. They will all get paid. You won't, because you're a retail trader and you're a small fish. Full stop. Get control of your crypto. And this is how you do it. It's very simple. Cold wallet. It's very simple. So that's why I'm extending my time in the office. We are updating our cold wallets for our corporate clients. We are moving everything. We've been doing that since Thursday, Friday. It continued yesterday. I wasn't even around for that. Tuesday, I'm sure they did it today. And tomorrow, I'm not going to the office, but Friday, I'll be supervising the process. Get your crypto out. We used to keep 1/5 of our total net worth as 365 trading flow on the exchanges because we trade that money. So we need it there, right? We remove leverage in around, blah, 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 blah. But from the beginning of time, I've done this. I've said this a couple of times on the channel. Never been this direct before. Not your keys, not your crypto. Now, a lot of you might then start to wonder, well, what's a cold wallet? And if there's a need, I can do a follow-up video for that this week, all right? It's not the time to panic, right? Now, there are many cold wallets, many. I am telling you that what I use for my family, where are they? On the other side of the desk, I think, right? What I use for my family, what I use for my kids, what I use for my corporate clients, right? We use Ledger, Nano Ledger, Nano S Plus, the Ledger X type of things, right? Well, I'll put pictures everywhere here. Ledger cold wallets are amazing. Personally, I know that there are many that exist that are different. I can't tell you a thing about them. I've been on Ledger since the beginning of dawn. My first cold wallet was in 2019. In 2018, someone introduced me, but it wasn't really mine. I messed around with it. I was growing something for them on it, but I had my own in 2019, and I've been buying a lot of them and using them for a flow. It's beautiful, it's secure, it's safe. A cold wallet basically means you can't touch it. You cannot touch. By the way, my videos are not sponsored. My YouTube videos are not even monetized. I don't have enough subscribers to get a sponsor or to get monetized. So this is not me pushing a product because there's a big sponsor in the background. No, I'm from my heart to yours. If you lose money, it will not be because Leroy didn't tell you what to do. Right. Now, there are different cold wallets. You are feel free to, try them all out and all that kind of stuff if that's what you want to do. But if anyone wants to ask me what I recommend, I definitely recommend the Ledger, fundamentally because of its use value. The Ledger comes with an app called Ledger Live, easy to use. You can manage your NFTs. We manage over 5,000 different tokens. You can manage over 100 installed apps from different exchanges, right? And actually with Ledger, you actually never need to move to a hot wallet to get your cash, right? So everything just stays cold. Cold is like a flash stick. It's like they're on the other side of this table, so I can't get up right now. But it's like a flash stick, basically, right? So cold wallet can't be hacked. Your crypto can't be stolen. It can't be controlled. The government can't take it away from you because you own the keys. By the time the FTX saga is done and contagion is done and the rush for poor, harsh regulation is done, Bitcoin would have fallen at those perfect demand levels. Altcoin season will start, but the government and institutions would have put a foothold in how they control this market. And again, you will be in a weird position in terms of tax, in terms of all these different things, because not your keys, not your crypto. So I would highly recommend you get yourself a cold wallet with uttermost urgency. There's still a lot of time, but not really, because no one knows, right? If you check how quick Bitcoin fell within the first 2 days of the FTX announcement, right? It took out a weekly demand with 2 daily candlesticks. We don't know how bad this week is going to be, how bad next week is going to be, if the FOMC is going to bring us more bad news in December. The CPI data, everyone thinks now CPI could be here, 7.7 for the past read, and then boom, take us back to 8.1. What you going to do, right? So when that cluster of bad news comes, right, the sharks can smell blood in the water. If you want, and please hear me out, specifically the Ledger, because that's all 365 deals with. That's all we can help you with. And there's a link down below. You can order directly from us. It covers shipping and everything. We can ship as far as Kenya. So every single African country, we can ship outside of Africa, of course, but then, the shipping cost might go up. But, if you're within Africa, you're within our reach, we can ship to you, right? If you want a cold wallet, the ones that I do, then we can make tutorials on how to use them, blah, blah, blah. But whatever small crypto that you have, it is valuable enough to you to move to a cold wallet. A cold wallet means your crypto is safe forever. You can literally hand it over to the next generation in your family when you die. That's the power of a cold wallet. You control the keys. And so there's all this drama, 3 years in Bitcoins at 100,000. Everything inside your cold wallet is appreciated in value. It is absolutely crucial to get a cold wallet. I can only help you with the Ledger, though, because that's the only one I use, and I don't want to spend some time researching other cold wallets. Unfortunately, it's not feasible with my timeline right now. But if you want to get it into our distribution tab, the same that we're giving to our corporate clients, then I put in an order form. You pay up front, you get it sent to you, get it delivered, and then you start to slowly move as quickly as possible your crypto into a cold wallet, right? And if there's any questions or any need for us to do a tutorial around that stuff, we can look into it, right? Straight after this video, right? But access to Web3 applications, NFTs, and all crypto tokens, I definitely recommend we move this stuff to the cold wallets. In the meanwhile, supply and demand has been faithful. Supply and demand has told us exactly where price is going. It has not been wrong. It has not been wrong. So by the time price gets here, if you're my Wealthy in 3 Years program, but if you are just in general crypto enthusiastic, make sure all your money is in a cold wallet. It gives you so much confidence because no matter what happens, your money is safe. So as the drama happens, we want price to fall, because when the bull market starts, we want to get this at very good discounts, right? So we shall see if this demand will hold, right? Right now, remember, as prices coming down, markets are also creating difficulty for price to rally up. That's another thing that people are not even looking at right now. They're just waiting for the day as a market bottom will be. Bottom for who, bro? As markets are coming down, markets are creating supplies. So I think we're going to bottom in the next 45 days, right? Somewhere in there, November, December as usual. But I do believe we're going to consolidate for a year, right? I think the true bull run will start in 2024. Now, if you are get rich quick scheme type of person, that's bad news to you. You have another year to wait. But if you are understanding of how wealth is accumulated, you are under pressure because you want to have good trading skills to start accumulating a lot of money, start buying these things while price is still low. Because the next Bitcoin bull run will take out. Look at this. Every time we have a top, right? And then look at that. It takes it out. Top, right? Look at that. Takes it out. So the next one is bound to take this out, and you really could become a millionaire if you're already not one. But you really have to plan. You have to accumulate. You have to get the right set of projects and all that kind of stuff, right? You know, it's really up to you. Don't give up on crypto, but move your money off the exchanges. I don't want my message to be mixed. Think about it this way. And I'll end with this. I don't know how long this video is, but I do feel a little bit out of breath. I'll end with this. I want you to think about this very carefully. Statistically speaking, to date, we have 46 trillion US dollars. 46 trillion US dollars in the stock market. Only stocks. I'm not talking about forex. I'm not talking about crypto, in the stock markets. And I'm talking about the American stock market, which means, you know, a lot of people outside of America, right, they already buy, there's a bar of entry because they're not citizens, right? So you can't easily buy shares. You can, but you can't easily do it, right? But 46 trillion US dollars in American stock markets is in the hands of 150 million Americans. Only 150 million Americans, which is technically half of America, I think. America is about 300 and something million people, all right, roughly. Half of them literally control 46 trillion US dollars. So that's why the stock market pain is quite well spread. That's a big deal. But crypto, in its infancy, the stock market has been around way pre-Great Depression. It's been around for many years, long time. Now, something as young as crypto that's only been around for about 10, 20 years tops, I guess, with the start of Bitcoin in 2010, right? So about 22, 23 years, right? Crypto market cap after this terrible bear market is at about $1 trillion US dollars, roughly $1 trillion US dollars. But here's the thing, and supply and demand traders, you must apply it everywhere. Check this out. Look at the demand. A $1 trillion US dollar market cap, but there are 300 million people invested in crypto in the world, not just in America, in the world. So what happens when these people keep their line of defense and we meet with a bull market, right? Simple. It's going to spread like the internet, where there was one person on the internet emailing one person, and there was Mark Zuckerberg on Facebook, Facebooking his 3 friends who he stole the program from, and before you know it, boom, 12 billion users, right? It's called a network knob. That's pretty much how this crypto thing is going to go. So we are literally still in a little bit early. It is imperative, if you want to retire, if you want extra money in the next 3 to 4 years, if you want to be rich, whatever that means to you, you cannot give up on crypto. But we can't move blindly. Secure your keys. Keep the crypto for yourself and your family. You can put that thing in a will. You can literally lock it up with an LLC, right? We can talk about all these things, man. It's literally writing these contracts out every time in the account. But the important part is you cannot do it if the exchange owns the keys. Not your keys, not your crypto. My name is Leroy James Siri. I think cryptocurrency is the greatest source of democratizing our finance system. We've enjoyed this video. Don't forget to subscribe. Don't forget to like. I will be hosting a live sometime this week. I don't know when, maybe tomorrow, on trading, right? We are, approaching the end of the week. So it'll be a scenario analysis type of live session, short-term day trades, just to kind of like give people signals, because I do that weekly. As of next week, we are launching our Crypto Wednesday. If you're already a student, don't forget to enroll. Trading Psychology is waiting for you, right? It's actually crazy that I'm still waiting for, I think, 4 people now to quickly enroll, and then we can start, right? So I'm looking forward to all the above. Not your keys, not your crypto. If you need our help, you have to fill in an order form, so we actually get a good idea of how many people, and then we just start distributing across wherever you are in the world. 365, shake my hand, and I'll see you next time. Peace.